Happy Friday, traders. It's 8 a.m. Chicago time on the 4th of May, 2018. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're seeing allocation to safety again. Although the DAX is up 36 points, DAX is not playing along with this selling that we've seen in the U.S. Equities market. The NASDAQ is the laggard today, down 25 points or 0.38%. Of course, this morning, I'm sure you heard we received the non-farm payrolls and they missed by a fair margin, 164,000 versus 192. The market reacted upwards initially. So we had the classic three-wave move. We just pushed up, pulled back, and then we had a continuation move, exhausted, up in the 26-29 area, and then we dropped to the scene of the crime. The scene of the crime for when the auction was interrupted by that number is 26.22. If you have the flex levels, you're probably seeing that on your chart. So that's what we have this morning. As far as what's on deck for the rest of the day, a lot of Fed speakers, ECB and Fed speakers, but that's pretty much it. Expecting this, since it is non-farm payroll Friday, expecting this to slow down as we approach the European close at 10:30 Central, 11:30 Eastern. Okay, so that's where we stand. As far as what was expected yesterday, here's the scenario review. Yesterday, we were opening out of range, below the last few days' ranges, actually. The expectation is for the market to drift downwards 26.12 and push up, struggle, but push up into 26.27 and ultimately end up at 26.3450 as the key target above. You can argue that scenario one happened, except they went to 25.91 and a quarter. They went a lot further, but it did have somewhat of a driving nature to it. Scenario 2 didn't happen at all. We did not even try to attempt to get into the prior day's range before selling off. Scenario 3 is really what happened. It was an open test drive down. The drive wasn't a huge amount of delta, huge volume. The volume was quite normal on the open. I track volume in 15-minute brackets against the 20-day average for that bracket, and it was in line. We ended up tagging 26.01 quarter, pushing all the way down 10 points, 25.91, bouncing back up and becoming neutral. Quite a day yesterday. Here's what actually happened. This is what things looked like yesterday. Just a lot of whipsawing around. We saw an open test drive, and then we took that drive all the way back, setting us up for an opportunity for a short, given the gap down and inability to push into the prior day's range. I narrated this trade in the Convergent chat room. And we extended the IB low out, and then had this just gigantic impulse wave and impulse rotation up 27.5 points. Wow. All the way through, made us neutral on the day. So now we broke the initial balance high, which is this yellow line. Remember, the yellow lines are the first hour's high and low, very important benchmark for the day to figure out where that is and which side is getting extended. And then we balanced for the rest of the day. We did end up hitting the big target up top, 34.75, a further push. Now we pushed down to 26.91 and a quarter, which was also a stock zone. So again, just like the day before, the range is bound by stock zones. And so we pushed to 34.75. Unfortunately, we had extended the range quite a bit. We had a pretty wide range yesterday, 91 and a quarter to 34.75. But the real target up top was 40.50. And we weren't able to manage to pull that off. So that's where we ended up. We end up with another elongated, non-consensus profile. Just look at that profile. What a shape. Looks like the profile of a laughing man. You see his teeth right here? Yeah, let's have some fun with this, like that. All right? It's a profile of a laughing man with a straight nose, unlike mine. So multiple distributions and unable to find consensus at all. The market is really actively seeking value. It's not given the inputs, whatever they are. It doesn't matter what they are. Given the inputs, it's unable to find consensus, and it hasn't been able to do so all week. And we're still struggling to do so now. So with the overnight session, we have a market that was completely waiting for the non-farm payrolls. I mean, just absolutely dead in the overnight session. No directional moves at all. The profile was very, very balanced. And we broke lower on this non-farm payroll release. And so that's what we have. Overall, we're trading in the most accepted price area of yesterday afternoon's close, and we are continuing. And this major release did not really move us. We're still hovering around the 26.22 area, and we're stuck at this 26.26. Now, 26.26 has been in play for 3 weeks or so, a couple weeks at least, I don't remember, and we just keep hovering around this price again and again and again. And so right now, what the market's indicating is a complete balance and a sort of a lazy open is what's expected. Before I get into the scenarios, I want to remind you again, it is Like Friday. Very important that you find the like button and hit the thumbs up. Please do so as soon as you can. It's important to get those votes. And let's look at our scenarios. So let's clean up this chart a little bit so it doesn't look so crazy. Let's get rid of the zigzags. We need the stock zones. We need these stock zones just so that you can see what our targets are. So let's expand this a little bit. This morning, so we had a neutral extreme close up. The neutral extreme close wasn't as clean as the neutral extreme close down the prior day. Okay, we didn't have a trend into the close. The market did not get interrupted. The auction on Wednesday was a neutral extreme down, where the market was interrupted by the close of the pit session. Yesterday didn't get interrupted. Yesterday it actually managed to move into neutral and to find consensus, to move the point of control and just trade sideways for most of the afternoon. Hang on. And so technically this is a neutral extreme. Why? Because we're closing in the upper quartile following a neutral day. So technically this would fall under a neutral extreme stat, but it didn't finish in an interrupted trend. It finished in balance. So the expectation coming into today was, well, we're likely to drift probably to 40.50. This is an important area here. But we didn't do that. Instead, we just traded sideways most of the overnight session. We're trading the mid and the point of control of the overnight session currently. So I'm expecting the open to be very choppy. Looking for chop in this area. And then it's really a 50-50 toss-up on whether it breaks lower or breaks higher. I'm looking at this overall, the fact that we're opening below Wednesday sell-off day low, I'm looking for this to attempt to push higher, and then I'm looking for facilitation, easier facilitation on the way down. The delta has been consistently selling over the entire week. There is a long-term seller participant group in here. So scenario one, I'm looking for selling to come in on an attempt higher. So I'm looking for the close way up here as the limit to this scenario. The point of control is the more likely test, and then I'm looking for this to turn down and push into the 2612 and 2610 area for the afternoon before it balances out. Expecting it to get lazy fairly early. On the secondary scenario, an open that drops early, pushes the overnight low, and then we get an impulse higher, push into the point of control, into the close, test above the prior high, and get us up to 40.50 before we fail. Now, I'm going to tell you that no matter what, I'm still always going to look at the order flow. I don't put orders out there and just hold and just wait. But the virgin test of 40.50 is 99% going to be sold on the first test. It's just a question of how we approach and when it's sold, but it will be sold. And so ideally, we would push into that area for an opportunity in the afternoon. And then I'm looking for it to balance out and push into the overnight low to break the overnight stat before it pushes higher on scenario two. Scenario three, reaction to the non-farm payroll miss was to the upside initially, puts pressure on the Fed to delay rate hikes. So it's positive for equities, but the market then woke up and sold off. And so what we did could be continued once we open. We open and we get sellers stepping in strong, and it'll be like yesterday's scenario 3, where sellers just take over. Which one is more likely to play out? It's really a toss-up with the 1, 2, 3 in that order, maybe with a slight advantage. But overall, we're trading in a range where it's likely to be, we're opening inside of the prior day's range and inside of the most valuable prices of yesterday. Anything can happen here. Today is the day where most people lose. If you look at your stats, if you're keeping track of stats, or you use something like the S5 Trade Analyzer or some other analytic software, you'll probably notice that Fridays are not your best days. So this is the day where I always remind you that it's just smarter to sit out than to be pushed out by your broker because you're taking horrible trades and you're holding on. So it's really important today to just let things play out a little bit. But Friday is the worst day to finish down or to finish with a big hole in your pocket, because you're going to carry that over into the weekend and into Monday. And the emotional damage from a Friday loss is much bigger than for the rest of the week, because you have the whole weekend to absorb it versus getting back in the seat and flying again the next day, which is what you need to do. So be careful today. Wait for things to set up. We should know, my expectation is we would know early on what the intent is, given the non-farm payrolls release. As the market opens, the bigger participants are likely to show their hands pretty early. So you don't need to wait long for whichever scenario you've devised and which side you'll be trading on. But just don't get too hasty today. Again, it is Friday. Good luck.